The three legal entities. Every six-figure earner needs set up before December. If you make six figures and don't have these three legal entities, you're paying thousands more in taxes every year, and you're one lawsuit away from losing everything you've built. The good news, setting them up takes a weekend and costs less than your last vacation. I'm walking you through the three entities every serious earner sets up before year end. The structure that creates a legal wall between you and your assets, the election that can save you 15% in self-employment tax, and the document that keeps your family out of probate court and out of public record when you die. None of this is complicated. All of it pays for itself within months. First, the LLC, the limited liability company. Here's what most people don't understand. Your name is the most exposed legal entity you'll ever own. Everything you sign in your own name, every business deal, every rental property, every freelance contract, is one bad outcome away from a personal lawsuit that touches your house, your car, your savings. An LLC fixes this by inserting a legal wall. You don't own the business, your LLC does. You don't own the rental property, your LLC does. When something goes wrong, the lawsuit hits the LLC. Your personal assets stay protected by design. The setup is shockingly simple. Pick a state. Wyoming and Delaware are the gold standards for asset protection and privacy. File the articles of organization. Get an EIN from the IRS. Open a business bank account. Total cost, about $300 to $800 and an afternoon of paperwork. If you have multiple income streams, a side business, a rental property, consulting, you should consider one LLC per income stream. The Rockefellers didn't get rich with a single entity. They built a structure where every asset lived in its own protected box. Here's the painful reality. Most six-figure earners I know still operate as sole proprietors because nobody told them not to. They're one slip and fall, one disgruntled client, one car accident away from losing the assets they spent a decade building. The LLC is the cheapest, fastest, most underutilized form of asset protection that exists. Now stay with me because this next one is the one that actually puts money back in your pocket every year. The S-Corp election. Here's the trick most accountants won't bring up unless you ask. By default, every dollar your LLC or self-employed business earns gets hit with two layers of tax. Regular income tax, fine, that's the price of doing business. But also self-employment tax, 15.3% on the full amount. That's the layer most people don't realize they're paying. When you make the S-Corp election, the math changes. You pay yourself a reasonable salary. The salary gets normal payroll tax, but everything beyond that salary becomes a distribution, and distributions are not subject to self-employment tax. Let me put a number on it. If your business profits $150,000 and you pay yourself a $60,000 reasonable salary, you save self-employment tax on the remaining $90,000. That's roughly $14,000 back in your pocket every single year, forever. The catch, and there's always a catch, is that the IRS expects a reasonable salary. If you take a $10,000 salary and a $90,000 distribution from a $100,000 business, you're inviting an audit. The rule is roughly pay yourself what you'd have to pay someone else to do your job. You make the election by filing Form 2553 with the IRS. It has to happen by the 15th day of the third month of your tax year. That's why I'm telling you about this in December. File it now. It kicks in January 1st. Wait too long, you give the IRS another year of self-employment tax. Quick check. If you're still watching, you already know more about legal structure than 90% of high earners. Hit subscribe so I can drop you the next one. Now the third entity, the revocable living trust. This one isn't about protecting your money while you're alive. It's about what happens to it when you're not. Every adult with assets needs this, and almost nobody under 50 has one. Here's the problem. When you die without a trust, everything you own, your house, your bank accounts, your investment accounts, your business, goes through probate. Probate is the public court process that distributes your estate. It takes 9 to 18 months in most states. It costs 3 to 7% of your estate in legal fees. It's part of the public record, which means anyone can pull up exactly what you owned and who got it. And during all of that, your family can't access the money they need. A revocable living trust solves every one of those problems. You set up the trust. You transfer the title of your major assets into the trust. You remain the trustee, so you control everything while you're alive. Nothing changes about how you use your money. When you die, the trust passes assets directly to your beneficiaries. No probate, no public filing, no 9-month wait. The setup is straightforward. An estate attorney drafts the trust document, typically $2,000 to $4,000. You retitle your major assets into the trust's name. You name a successor trustee. Done. Almost every wealthy family has had one of these for generations. Almost nobody else does. LLC, S-Corp election, revocable living trust. 3 documents, less than 4 grand total, and the protective structure of someone with 10 times your net worth. Get them in place before January. If you want me to break down how to layer these 3 together into a full family office structure, comments stack below. This isn't legal advice. Talk to an asset protection attorney and a CPA, but put this on your calendar before year end.